Hey, everybody, and welcome back to the very last episode of 2025 for the Arizona Monthly Housing Market Update. I am Katie, and this is
Matt, and this is
Ryan. Happy
Hey.
holidays, everyone. Happy December.
Hey
Yes,
Team. We
very
have
much.
kind of some exciting updates. I mean, I don't know about y'all, but usually around this time it's a bit more quiet than it has been, yes?
Yeah, at least for the last couple years, for sure. So I feel like, yeah, this spike in positive activity is happening.
It's been exciting. It's had me running all over the place. Anyway, but before we dive into that and what we've experienced lately with our buyers and sellers, let's get a little rate update, Ryan.
Yeah, thank you. I mean, the big focus right now is the Federal Reserve meeting that they have next week, and if they're going to cut rates, it's December 9th and 10th. Now, just a reminder, I know we've been over this a few times. The Federal Reserve, they have a dual mandate. Number one, they want to maximize employment. And number two is to keep prices stable, or in other words, keep inflation low.
Mm-hmm.
And after inflation spiked with the low rates we had during the pandemic, rates had to go up to bring inflation back down. And the
Right.
good news is, it's worked. Inflation dropped from over 7% in 2021 to about 3% this year. So, this is still over what the Fed really wants. They want 2%, but, they're still seeing it as at a pretty manageable level at just a little over 3. So the Fed's main focus has really been the jobs market, the other half of the dual mandate. And the reason we've seen them drop rates twice so far this year is, that we've seen a rise in unemployment. And just yesterday, ADP, who's the nation's biggest payroll provider, they did estimate there was 32,000 jobs lost in November, and this was a lot weaker than estimates. So on this news, the probability of a rate cut next week, it's increased to about 93%.
Wow.
That could still change, that we got some inflation reports coming up tomorrow, but as of now, that's about the highest that we've seen in a while. So, currently, mortgage rates are at their lowest levels of the year.
Mm-hmm.
And, with the Fed projected to probably continue dropping rates to really boost the jobs market, we could continue to see that in 2026.
Absolutely. And Cromford Report, that's my very favorite resource here in the Phoenix area, reported that this fourth quarter in the greater Phoenix area has been the highest of contract activity in the last 3 years. So far Q4 is, I mean, that's why we're out running around like we are, right, guys?
Yeah.
It's been really busy. Have you noticed that on your end?
I have, yeah, definitely. And I think part of the surge is investors. We've seen a lot of investors kind of coming back in and maybe trying to get a house before the end of the year. They see rates are lower. They see that, prices have softened a bit, and there's definitely some deals out there. Plus, tax time, the bonus depreciation that they could write off on their taxes. And on top of that, builders are trying to get rid of some of their inventory at the end of the year. And I think that combination right now is definitely helping boost activity for what we're seeing, which is not typical, like you said, especially over the past 2 years.
Yeah, absolutely.
Mhm.
Matt, can you speak a bit to investor activity? I know that you pay close attention to inventory levels, rental inventory. When I had a listing appointment in Queen Creek yesterday, and we were kind of back and forth whether we wanted to rent or sell. I was looking at rentals. It seemed a bit saturated out there, just my quick look. But what do you say?
Yeah, definitely. And when we're talking about investment, we got to kind of break it up into a couple. We've got short term, long term. Long term are going to be more of the rent and hold. Short term would be more of the flip, a shorter term investment. What you're seeing definitely right now is a very slow time when it comes to rentals. It's always really been that way. Anytime we get near the holidays, everything really slows down on the rental front. The really interesting thing that I'm noticing this little time around is the inventory level. Usually we'll see inventory spike up on
Right.
when it comes to rentals, and that's not the case. It's been dropping. It's remaining very linear to the activity from sales available inventory, which has also been dropping 1 to 2% week over week. Usually we don't see that on the rental side. They would do the opposite. So I think that's very interesting. We do have a couple rentals as far as investors go. They're not getting the bites that they want right now just because of the time period.
This season, yeah.
But I think that's the reason. A lot of people, once again, they don't really want to be moving if they have to in between this time period. Um, but the fact that we're going to be emerging into a stronger rental market, which is going to be our January, February, and into spring with a lower inventory, I think is a very, very good indicator that we're going to see some stuff pop. Now, on the flip side, I think the other thing that's really interesting is, we saw a lot of new inventory being added to our rental market over the last couple years. And I really think a lot of this inventory that's been added is a bit artificial. And what I mean by that is, and I know we discussed this on previous episodes, but it's ultimately people that really had no plan to become landlords. They just had such a low rate on their properties that they
Yeah.
decided, hey, we need to move or, out of state, or we need to upgrade to a larger home. We've got such a low rate. Let's just go ahead and rent it instead of, taking a loss or not selling it at what we want to sell it at. And so you had a lot of those people jump into that. And I think now that we're starting to see rates come down, things pick up on the sales side, we're going to see a lot of those rental listings disappear, turn into sales. At the same time, we also saw a lot of short-term, like the VRBOs, Airbnb type of rentals that was the hot thing to get into in the 2021 market, and a lot of people realized that it's a lot more intricacies involved in running that than the
Harder
quick,
than
hey,
you
let's
thought.
yeah. So a lot of those people quickly shifted. And a lot of the local mandates that really buckled down on short-term rentals definitely made it a little bit more difficult, not as appealing. So a lot of those were also dumped into the long-term rentals, I think we're going to start seeing a lot of those start to exit as well. So this really primes, I think, for a good speculation on rents, potentially staying stable, but even going up if we start to see that rental inventory drop. I think a lot of people will be leaving the rental market to potentially purchase.
Yeah.
But I also really think that the offset of every time we see our sales inventory pick up, that's also an indication of people moving into the city, people coming in. And I think that's a lot of those people that are moving in, most of them are like, hey, let's rent first. And if they're coming from these areas that already have really high rents, like from California, New York, Chicago, all these places where we see people coming from, they look at our rental rates and kind of say, that's a great deal. So they're going to not have really any problem with that. Now, the downfall of that is if you are a renter, it's one of those things to really kind of prepare that you might see an increase in rent prices.
Mm-hmm. Mm-hmm. Is that what you're seeing too, Ryan? Because in my personal experience with dealing with sellers, that happened a lot in this past year where they were like, let's just look at renting it instead of selling it. And as Matt said, that's not really their intention. They don't go to bed every night dreaming to be a landlord, these particular people. So, and some that I've had conversations with, they're just like, yeah, we can't wait for our lease to be up because we're going to stick a sign in the yard and get rid of this thing come 2026.
Yeah, we've been seeing a lot of that as well, accidental landlords really. And because they're house blocked, and then they're looking at their rate, it's 2.75%. And, a lot of them this was kind of the tipping point year where they were just ready to move. A lot of them have growing families, they need bigger houses, bigger yards, and just weren't really wanting to wait anymore. And after testing the market a little bit, not getting much, activity, renting it for a year and really hoping that next year is going to be better, which it is looking like it is going to have much more activity than we saw this year.
Absolutely. Crumford is predicting that we're going to have that it's looking like a strong Q1 for 2026 as we move into Q4 and toward the end of it. And I feel that too. I'm seeing a lot of luxury as well. It seems like they were gone for the summer because, they were doing their thing while it's super hot here, and now they're back. And 1 to 2 million is really, really busy. Cromford is saying about 24% of sales is Southeast Valley for this 1 to 2 million price point, which is really interesting. Are you seeing that too, Ryan?
Yeah, everybody asks me, is it a buyer's market? Is it a seller's market right now? I'm just like, hey, it just depends because
Yeah.
the seller's market's like on the Cromford report. It's just listen to these cities. It's Fountain Hills,
Hmm.
Scottsdale, Paradise Valley. What do they have in common? These are high priced areas,
Yeah.
and
Yeah.
Chandler and Gilbert are on there too. And yeah, we're seeing a lot of that activity. And really, the markets that are much more of a buyer's market where you can get better deals are Maricopa, Buckeye,
Mhm.
Queen Creek, for instance. So yeah, it depends where you're looking, and that's really kind of the story of this year, what we've seen.
Agreed. Something I was a little bit surprised-ish to see in especially this time of year in the Queen Creek Santan Valley area is they're balanced.
Yeah,
On your entry level price point is what I've been kind of working with out there with these couple of clients that I've had recently. And I was really excited to share with them that they're balanced because they were kind of a little bit nervous, right? But they've got a lot of really great things coming to that area, some
Oh yeah.
expansions in the works. And so I feel like that area is just going to continue to explode. Are you guys
Yeah.
seeing that too?
Oh, 100%. And if anything, Queen Creek used to be something we would say is the outskirts.
Yeah.
It's not
yeah,
really
No.
anymore. It's not. There's so much development. There's so much movement. When you start to look at where some of these luxury priced homes are selling, especially the higher numbers, ones that go above 2 million, they're in this area. So that just says so much about this area and the market in general. I also think like what we're seeing as far as like all these little pockets of buyers, sellers markets, and they're right on the cuffs of being balanced. That really says I feel like that we're definitely preloaded for any good economic positive rate data. Anything that's going to kind of enter our marketplace is really going to just be a springboard.
yeah,
We're not seeing this big trend of like buyers markets all over, which is, when you see buyers markets, that's usually an indication of price drops. That's
Hmm.
usually an indication of not such a hot market. It's good for buyers, but not great for sellers. So I think what we're seeing right now is definitely a springboard really, really being ratcheted down, and it's with that right rate news, some good positive economic news. I think Arizona's, we went from being like one of the leading economies in the state 4 years ago to one of the bottom. So I think really the beautiful thing about this is there's really no way but up at this point, and I think we're going to see that. So with all those little ingredients being added into this bowl, I think it's going to be a pretty fast moving 2026 uh, as far as seeing inventory drop and prices increase.
Agreed. I am seeing signs as well. How about land, guys? I have had a couple of buyers, which has sort of surprised me lately because we don't really have a ton of land. We don't really do a ton of land. We're mostly resale. But I've had several land buyers recently, and I feel like we're running out of land. There's like not really a whole lot to choose from. And people are really flocking to Gold Canyon, Apache Junction on the east side. And that surprises me too, because back in, just a couple of years ago, that wasn't as popular as I'm seeing now. Are you guys seeing that too?
Yeah.
yeah. I'm definitely seeing that on my side as well. During the really busy periods that we saw in 2020 and 2021. Land was a little bit more popular just because homes were just moving so fast, and
Mm.
people were getting outbid and just a little frustrated with how hot the market was. So that cooled off a little bit as we've seen a little bit of a drop in demand. But now, when things, prices are a little bit higher, people are definitely looking at more unconventional options. Like, yeah,
Mhm.
you're
Yeah.
buying land and building their own house can
Mhm.
be a great option to make a little bit more of affordable property.
Yeah. And to kind of tail off that, though, I also feel like it's another one of these indicators that we're talking about when it comes to confidence, because you got to think about the person that's really going to buy land. It's a lot of people that are going to be entering into that buy land, build a home. It is about affordability, but at the same time, that's a long process. It's going to be a costly process.
Right.
There's a lot more risk associated with buying the land, speculating, building, dealing with all those intricacies. So when that risk is high, you don't see that much activity. just like, I think representative of the last couple of years, the fact that we're seeing people now dip their toes into this is really saying, hey, we are down to probably pay a little bit more for a construction loan. Understand that we might be displaced for 6 months to a year if it doesn't go as smooth. All these little risk items are now being, they're less risky, which says there's confidence. Their money's going to be working right, instead of buying a piece of land and saying, oh, is it going to drop in value in the next 2 years before we're built? Or, could I just go buy the same home for the same price? No, people are saying, no, we're seeing this. This makes sense.
I think it's 100% also the change in the family dynamic as well. A lot of what I'm hearing from our buyers is that, it's kind of, they say the sandwich generation, middle-aged parents right now, they're raising their kids, but they also have their boomer parents who are needing more assistance and moving in with them. And sometimes just not finding that right property out there with resale that can really accommodate, 3 generations of families. So being able to kind of look at a blueprint and build your own multi-generational home that could accommodate maybe like an attached property for your parents, and then, a house for your kids and yourself. So that's what we're seeing a lot too, is a lot of people just really want that freedom to build what they need for their multi-generational homes.
So true.
Yes. And having the option. When you build, you're going to have a larger lot. And I think that's it. When you start buying resale and stuff, you don't have that larger lot and that option that if all of a sudden we needed to build a substructure down the road for mom or dad or whoever it was, you don't have that. So it's like, all right, let's, definitely do that. That's a great observation.
I have a few families right now that are in that boat, and they're wanting to get on, into something that's like an acre and a quarter. Maybe it's got a mobile home on it that they can live in while they build their custom. And then they're putting their parents or their college age kids, whatever, in that mobile home is kind of the plan. So yeah, I am seeing that too. Another piece of information that I thought really was interesting in terms of confidence of our area is 10 million plus is having a gangbuster year is what Cromford is reporting. So that's got to tell us something, right?
Oh, yeah. That says a lot. I think anyone, especially of that caliber, that they're going to pay cash, most of these people will be.
Of course.
That's a big indicator. Most of the people that are spending that type of money too, and it's hard to fathom. It's not even their primary residence,
right?
So it's looked at like you would as not so much an investment, but at the same time it is. And I think a lot of these people that do play in that arena do understand sometimes the challenges of selling a home that's more than $10 million and what's the downfall of that. So when they're purchasing, they're thinking about all this. So no, I think that says so much. And it's definitely a strength indicator, a long-term strength indicator is my feeling.
Agreed. So 2026 has some big news coming up. Yes, Ryan? Do we want to dive into that real quick before we end the show?
Yeah, absolutely. Matt kind of hinted at it. We're kind of waiting for that catalyst that is really just going to kind of, turn the tides with everything. And one of those things, it could be really the new Fed chair. The current Fed chairman, Jerome Powell, he will be leaving office in May. That's when his term ends. And, since President Trump has entered office, he's made no secret about his frustration with Powell not really lowering rates fast enough. There was even talks early in the year that they wanted to let him go before his term ended in May 2026. That didn't happen. But the big question now is, who will the next Fed chair be? It's going to be announced maybe next month at the latest, maybe still by the end of the year. But it was reported that Trump has decided on his Powell's replacement already. Many are predicting it's going to be Kevin Hassett. Now, President Trump has commented that he wants the funds rate at 1%. The current rate is a 3.88%. And the good thing about Hassett, he's pretty close right now with Trump. And so the market feels like there's going to be more aggressive rate cuts after he takes over. So, this decision will have big impact on rates next year. So we'll be keeping you up to date on that. But that could be, probably one of the bigger news items next year that's going to impact the housing market.
Absolutely.
100%. And it's already, I'm sure you're probably even seeing it already have some effect on mortgage rates, having that name floated and stuffed, because of, they know that's probably the angle that he's going to go. And you couple that with a lot of the deregulation that's being talked about in building and all this stuff. that's a really good recipe for some growth, in my opinion. And one last thing to kind of jump on back to what we were talking about, that is, we've spoken about this in the past, but I think it's a reality now. And it's the outerlying areas where Phoenix is expanding to. It's always like, is it the East Valley? Is it the West Valley that's going to really grow? And now we've seen them both extreme growth. And then we're seeing extreme north now because of TSMC and a lot of that spectrum that's growing. Now you look at down by. Yeah. So like we literally have a full circle around our compass that is growing. Now, the interesting thing is, we talked about this probably years ago. Yeah, multiple times, the self-driving car. And now that we do have full self-driving, and I've got a few buddies that have it, and they're like, it's insane. I can look at my emails and do work all the way into the office. And it's
like in heavy traffic.
Yeah, like
wow.
Like there's this stuff that's coming out. So I really, really think when you start adding that into this equation, when all of a sudden we see inventory really lowering, things becoming competitive, it's really going to start to make people think, well, it does benefit for me to even go further outside of the valley. An hour transit in can be incorporated into my workday, because now I can get a lot of the stuff done that I needed, and I don't need to be confined to the city. This also really resonates a lot on the ears of a lot of people that are coming from out of state that might like that more rural lifestyle and not want to be in the urban. And they're like, hey, I like to be on the outskirts. An hour drive is no problem when coming from LA or these other areas. It's like, so I think all those little ingredients, we're going to start to see even more strength in these outerlying areas, especially along the 17 with that new flex lane up towards Verde and all that. Like, that's really my feeling. We're going to see that in the next, I'd say 18 months.
Totally agree. I am excited for 2026. I know you guys are too. Audience members out there, our followers, you guys should be excited as well. So stick with us next year. We will be here each and every month, just like we have been for the last several years. And if you want to check out any of our previous episodes, hop on over to our YouTube channel. It is at Team EvoAZ. That's our handle. Scroll down just a little ways and you will see this playlist, the Arizona Monthly Housing Market Update. You'll also see the rate update, which I do each and every week. Thanks to Ryan. Appreciate that information that he sends to us on a consistent basis. It's been very, very helpful to our friends, followers, our clients. So again, Ryan, thank you so much.
Well, thank you both. Always a pleasure to do these. Excited for a prosperous 2026 for everyone.
Same here.
Absolutely.
Guys, if you want to connect with any one of us, evoaz.com is the first step, and we'll see you in 2026.
Perfect. Bye, everyone.
Happy holidays, everyone.
Happy holidays.
Happy New Year. Talk to you next year.
Bye.
Looking to buy or sell in Arizona's hottest neighborhoods? Meet Team EvoAZ, your Arizona real estate experts, driven by data, powered by passion. Meet Matthew Lambert and Katie Holly Lambert, the powerhouse duo behind Team EvoAZ at eXp Realty. With their talented team of agents, they're making Arizona real estate personal and powerful. Trusted, tenacious, Team EvoAZ. Team EvoAZ offers full-service real estate, powered by strategy, experience, heart, and a passion for helping people move forward. Ready to make your move? Visit www.evoaz.com and follow us on social media to connect with us.